The stock market is crashing, but what if I told you that this is all a part of the Trump administration's master plan to address the $36 trillion elephant in the room? In this video, I'm going to explain to you exactly what's happening, what's likely to come next, and how you should position yourself. Let's get right into it. So far in 2025, the S&P 500 is down 7%, the Nasdaq is down 10%, and Bitcoin is down 12%. But what's happening is actually pretty simple. Investors are uncertain about the future, tariffs and their impact, inflation, economic growth, Fed policy, etc. And when investors are uncertain, they sell risk on assets and buy risk off assets. And the primary risk off asset investors are buying right now, US Treasuries. This is exactly what Donald Trump and his Treasury Secretary Scott Bessent want to happen. They want investors to flood into treasuries and drive interest rates lower. That's priority number one. Bessent has been very explicit about this strategy with quotes like, the president wants lower interest rates. He believes that if we deregulate the economy, if we get this tax bill done, if we get energy down, then rates will take care of themselves. The president wants lower interest rates. And in my talks with him, he and I are focused on the 10-year treasury. He's not calling on the Fed to lower rates. President Donald Trump is focused on implementing policies that will lower long-term borrowing costs. When most people think about interest rates, they think about Jerome Powell and the Federal Reserve. But Fed only controls the overnight rate, short-term interest. The 10-year Treasury rate is what matters most. It's what drives mortgage rates, business investment, stock market valuations, and more. Getting the 10-year rate down helps stimulate the economy, and it could soften the blow from any short-term impact caused by tariffs. But the primary reason the Trump team wants long-term rates down is the national debt. The US Treasury has to borrow a lot of money this year. Roughly $2.5 trillion worth of existing debt has to be refinanced. And on top of that, another $2 trillion in new debt will need to be issued to fund the deficit. That's about $4.5 trillion in total Treasury issuance. Right now, the government spends more money every year on interest than it does on the entire US military. If the Treasury can get rates down before all of this debt is issued, it could save hundreds of billions of dollars in interest expense and avoid a full-blown debt spiral. So, lowering rates is the plan, and the plan is working. The 10-year yield started the year at 4.6%, and now it's on the verge of breaking into the threes. But what happens next? In the short run, we'll likely see more of the same. Just enough policy uncertainty to keep investors nervous and continuing to purchase treasuries. But here's the kicker. You don't want to be left holding the bag when the sentiment flips. Because once the refinancing is complete, once the debt is locked in at lower rates, the Trump administration is going to shift focus. At that point, they'll want to reignite the stock market, reignite the Bitcoin bull market, and head into the 2026 midterms with a booming economy. So, despite all the fear and panic in markets right now, this dip may not last much longer. Here is the dark horse in all of this, the Federal Reserve. For the past 3 years, the Fed has been engaged in quantitative tightening. But the Fed has to perform a balancing act between inflation and economic growth. And we're now starting to see the risk tilt in the other direction. And consequently, the Fed is changing their tune. Jerome Powell has already committed to a pause in quantitative tightening, which means quantitative easing could be up next on the menu, especially if the market has trouble absorbing the $4.5 trillion worth of treasuries and the Federal Reserve has to step in as the buyer of last resort. I don't think it will be long before the Federal Reserve gets back to rate cuts and ultimately QE. With all this said, how can you position yourself? Well, there's one asset that tracks global liquidity more closely than any other. There's one asset every high-ranking official in the Trump administration is betting on both personally and professionally. There's one asset that Larry Fink, the CEO of BlackRock, has said could one day replace the dollar as the global reserve currency. There's one asset with an immutable finite supply of 21 million. That asset is Bitcoin.